Last month, Bitcoin, the king of crypto, exploded 25% higher in just 1 week to finish at its highest levels of 2023. Since then, Bitcoin has been in a bullish sideways consolidation pattern over the past 4 weeks. This bullish consolidation pattern could soon lead to a breakout to new highs of the year. However, the shorter term sentiment of Bitcoin has been bearish and has the bulls on edge. In today's video, we're going to take a look at where Bitcoin may be headed next, looking at key levels to watch, and we'll also dive into Ethereum and what's up in the altcoin market, looking at top relative strength cryptos that are on our radar for potential buy entry in the coming days. Before we dive in, remember to subscribe, hit that like button, and turn on the notification bell to make sure you don't miss another Morpheus crypto video. First up, let's take a look at the weekly chart of Bitcoin. One bar that you see here represents a full week of price action. So the weekly chart is very useful to show us the big picture of what's happening in terms of the dominant trends. The daily chart is more common and more frequently used by traders. However, the daily chart often has a lot of noise, especially when it's a choppy market and there's a lot of gyrations in price movement. The weekly chart tends to smooth out those gyrations so you can really get a clear idea of what's happening. So on this weekly chart of Bitcoin, we can see last month's breakout that we mentioned, and the big candle up here in just 1 week was about a 25% gain. And since then, notice how the price action has been consolidating near the highs of that rally. So we've had a bit of choppy price action as evidenced by the wicks on the candles here. There was some indecision and a bit of a tug of war between the bulls and bears over the past month. But if we remove all of that intra-week indecision, we see the big picture is that we've got bullish consolidation near the highs. Now, we do have resistance here from the prior highs of April right at the 31,000 mark, and that's where Bitcoin has stalled on at least 6, 7, 8 rally attempts over the past month to break out above that 31,000 level. However, despite not being able to break out above the 31,000 level yet, the price action continues to hold near the highs. After a strong rally, the price of a cryptocurrency typically enters into a period of correction. As mentioned in our recent video, we've got a correction by price and a correction by time. A correction by price is more commonly known as a pullback, and that's where the price dips back down to touch a moving average, and that attracts buyers and the uptrend resumes. But a correction by time is when the price action just trades sideways and allows the moving averages to rise up and eventually meet the price in the same manner that a pullback would do. Now, between a correction by time and a correction by price, a correction by time is more bullish because it tells us that the bears are not stepping in to sell while the bulls take a rest. And that means that there's less overhead supply to absorb. And when the bulls return, the price action can break out to new highs. So that's what we see happening right now in Bitcoin is we've got a correction by time over the past month, which is bullish and could soon lead to a breakout to new swing highs and new highs of 2023. However, it's important to also know the short-term trend, and let's go ahead and zoom into that shorter-term daily chart of Bitcoin. On the daily chart, we now see a clear line of support at the 29,500 level. That's the lows of the range of the past month. And over the past week, in this little rectangle here, you can see over the past week, notice we've got a volatility contraction. Compared to the prior weeks, notice how the price action has really become less volatile. The intraday trading range is much lighter than it was when we had all this indecision over the past couple of weeks. Now, typically, when you get a volatility contraction, that precedes a volatility expansion. And the longer you've got this volatility contraction, the more powerful the volatility expansion. The volatility expansion is also known as a breakout, which means we could soon see a big move in one direction or the other. A breakout doesn't mean we're necessarily going to break out to the upside, but it means a breakout from the range. In this case, one possible scenario is that we could see an undercut below this 29,500 level because the price action is consolidating near the lows over the past week. And when you see that, typically that leads to a breakdown to new lows. So because of that consolidation near the lows, we could see a undercut that dips below 29,500 and tests this support of the rising 50-day moving average, which is currently right around the 29,000 level. Now, anything is possible in crypto, but that scenario is very likely. We've seen it many times when there's an obvious level of support. Traders will run down the price action to run stops, trigger stops below the support level, and then the buyers step in and it reverses. Often we need to see this type of shakeout action, also known as an undercut, in order to see prices move higher. So if we break below this 29,500 level, watch how the price action responds on a test of the 50-day moving average. It's totally normal to dip below that level and run the stops, but we'd want to see the price action get back above the 50-day moving average within 1 to 2 days, and that would be bullish if that happens. Now, of course, we may not see a breakdown below the 29,500 level, but it's becoming more likely, especially with the price action trading near the lows over the past week. If Bitcoin attempts to rally in the coming days, we've got key resistance of the 10 and 20-day moving averages just overhead, and that's at the 30,000 level and the 30,250 level. And then we've got resistance of this short-term swing high from earlier in the week, which is right around the 30,400 level. So basically, all the way up to this 30,400 level is going to be significant short-term resistance. But if we get above the high of this rectangle, the high of this 30,400 mark, then we could see momentum flip back to the bulls in the short term. Overall, we've got conflicting signals in Bitcoin because the shorter term time frame is showing a bearish consolidation near the lows that could soon lead to a dip below this range and a potential test of the 50-day moving average. However, zooming out to the longer term weekly chart, like we showed you earlier, just shows a consolidation pattern near the highs after last month's breakout. So when we've got conflicting signals, such as a bullish pattern on a weekly chart, but a bearish pattern on the daily chart, the longer term time frame holds more weighting. So keep an eye on the weekly chart of Bitcoin so that you can stay focused on the big picture trend. Now let's check in on Ethereum as a proxy for the overall health of the altcoin market. We see that earlier this month, we had a big breakout attempt on July 13th, and it looked pretty encouraging. We got above several months of resistance, but the price action stalled at the prior highs from May and had a nasty sharp sell-off the very next day that took the price action all the way back down to the 10 and 20-day moving averages. Since then, the price action has been drifting lower. That's what happens when you get a failed breakout. The bulls who buy the breakout get trapped, which attracts more sellers, and then you often get this type of action where not only does the breakout fail, but we head all the way back down to test the prior lows. So you can see, whereas Bitcoin's been really just trading sideways in a tight range, Ethereum has been trending lower. Now, that being said, the positive is that Ethereum has already come into support of its 50-day moving average. You can see here throughout the past month that the 50-day moving average, this red line, clearly acted as support for Ethereum once, twice, and now the third time with yesterday's test of the 50-day moving average. So if we hold this 50-day moving average, this could lead to a rally opportunity, just as it did on the previous two touches of the 50-day moving average. However, a breakdown below this 50-day moving average would mean that all bets are off on the long side of the market in the near term. But again, as we mentioned with Bitcoin, a one-day undercut below this 50-day moving average is okay as long as the price action steps back above it. As for resistance, you can see we've got the 10 and 20-day moving averages acting as resistance right around the 1900 level. Both of them are converging. So Ethereum has a lot of work to do if it starts to rally, lots of resistance. However, we got this 50-day moving average holding up. So Ethereum is really just kind of a choppy, sloppy mess at the moment. But we do have some encouraging patterns developing for potential pullback entry in some of the leading altcoins. So let's go ahead and take a look at the top relative strength altcoins on our radar for potential buy entry in the coming days and weeks. On July 13th, news came out that Ripple, XRP, won the lawsuit against the SEC in which the SEC claimed that Ripple was a security. And that news, which was long anticipated by Ripple fans, caused the price of Ripple to double in just one day from 47 cents all the way up to a high of around 94 cents. So that was a pretty amazing move. And that huge volume move was actually the catalyst for the breakout attempt in Ethereum, which did fail a day later. Now, although the breakout attempt in Ethereum failed, notice how XRP has basically just been trading in a range near its highs since then. So we had a strong pullback the day that Ethereum failed the breakout. But since then, XRP has been holding near its highs, had another rally attempt a few days later, and now is just undercutting its 10-day MA. So XRP is one of the top relative strength cryptos on our radar right now. And if we see any strength in Ethereum, then XRP is likely to lead the way based on its recent breakout action. But until then, right now, it's just in a choppy range. And that actually is the case with most of the altcoin market right now. The top relative strength cryptos are largely following Ethereum, although they're diverging with some slight bullish divergence. Keep an eye on XRP for potential buy entry on a move back above the 10-day moving average, which is currently around 75 cents. Over the past several weeks, we've noticed emerging relative strength in the blockchain sector, which includes cryptos such as Solana, Matic, and Avalanche. And SOL is a former leader during the last bull run that's been showing increasing relative strength in recent weeks. SOL broke out on big volume alongside of XRP and ETH on the 13th. But notice how when Ethereum failed to break out on July 14th, that SOL actually continued higher. And since then, while Ethereum has been trending down all the way to its 50-day moving average, SOL has been holding relatively near its highs. Now the price is approaching support of the rising 20-day moving average, and we've got a short-term downtrend line from the highs. So SOL could be in play as a potential pullback entry with a relatively high risk-reward ratio. We can set a tight stop just below the 20-day moving average with a breakout entry above the downtrend line. So we're not currently in this position, but we will send a trade alert to Morpheus Crypto members if we spot a valid entry point with a relatively low risk buy point. Avalanche, AVAX, is another former leader in the blockchain sector. And this also has been showing emerging relative strength ever since the breakout of July 13th. However, the relative strength has been weakening over the past couple of days with an undercut of the 20-day moving average. Nevertheless, there's major support here around the 1350 level, and we've got the potential breakout above the downtrend line just above. So if we see any type of strength in Ethereum, we could see another run in AVAX. Again, what we really like here is this big volume. Volume doesn't lie. Volume is the gasoline that powers rallies. And we can see here we had big, massive volume on this breakout, followed by lighter volume during the correction. And that's what we want to see. Chainlink, LINK, is an OG large cap crypto that was a big winner for us back in the 2020 to 2021 bull market. And the price action has been pretty stagnant for quite a while. But we noticed that just 4 days ago on July 20th, we had a huge volume breakout, massive volume. Look at this volume surge here, highest volume by a long shot in many months. And now we're forming a bull flag after a slight pullback from the high. What really caught our attention with Link is the longer term weekly chart, where we see a base, a sideways base over the past year, where Link has just been trading in a sideways range. Now, with that big volume breakout that we had just a few days ago, we've already got a big volume spike going on the weekly chart, and we've got resistance right around the $8.80 level. That prior high from April at $8.80 is the key level we're looking at for a potential breakout entry if the price actually gets above that level. So on the shorter term daily chart, we could see some more chop, but for a swing trade entry on a breakout above the $8.80 level, we could see a nice rally if the momentum resumes. Over the past few weeks, we've been talking about the increasing relative strength in large cap DeFi, such as MKR, COMP, and AAVE. And we can see that that relative strength remains. MKR broke out to another new swing high just over the past week on strong volume. So the large cap DeFi cryptos remain in play on pullback. Notice how the 20-day moving average has acted as support on the pullback here for MKR. So if you're looking for a potential buy entry in the DeFi sector, look for a potential retracement to the 20-day moving average for an ideal risk reward. As usual, the analysis in this video and all of our videos is not financial advice, but it's simply how we see the charts. We hope you enjoyed today's video. Head on over to morpheustrading.com and click on Crypto Picks to find out more about our crypto swing trading services and how you can learn to trade with confidence. We'll see you back here in the next Morpheus Crypto video.